get rich slow. There's no shortcuts. Don't chase the 100Xers. Do the things that you're doing in real estate. Keep compounding, and you're going to be uber successful.
Welcome to the Wild West Real Estate Podcast. And now, here's your host, Mark Hinteman. Today's guest is a former professional poker player turned real estate investor. He's co-founder and managing principal at Evoke Capital. I'd like to welcome Pasha Esfandiary.
Thanks, Mark, for having me. I'm excited to be here, buddy.
I'm excited to have you. You probably get asked this 1,000 times. Did I pronounce the last name correctly?
You were closer than some. Let's just say it that way, you know? But I'm also not surprised on it, but you were pretty close. It's Esfandiary.
Okay, Esfandiary. Okay,
Yeah.
right. I saw it. I didn't think of it until I was middle of reading it, and it was the next word. And I was like, all right, here we go.
I should have researched this name, but no, it's totally fine.
Yeah. All right. Well, how did you started out as a poker player, professional poker player?
Mm-hmm.
How did you do that?
Well, I mean, it's pretty simple. We can go as far back, but I'll give you the really simple answer. If we want to expand, we can. I dropped out of college. College wasn't for me. And my brother in 2004 won a tournament. This is when poker was getting really big, starting to go on TV, and stars were kind of being born, and it kind of became mainstream. And so he actually became really famous within the poker community. And I had just dropped out of college. I didn't know what I was going to do. And I said, if my older brother can do it, I could for sure do it. And then that's how I started. And then it was just playing home games. And then, this cool story, an ex-friend of mine stole money from me, essentially. He borrowed money from me to go play poker. He lost all of it, but he was writing me checks and I wasn't cashing him in. When I went to go deposit the $2,000 worth of checks, he was completely broke. And so he lied to me to borrow these $2,000, which was basically all the money to my name at that point. And so I went to Las Vegas. I had about $100 in my pocket because my brother and my dad were there. And I turned that $100 during a World Series summer event to about 20,000. And for me, 21 years old, that was a lot of money, and so then it just kind of took off from there.
Oh, cool. Yeah. So you made a profession out of it.
I did. Yeah.
Where'd you grow up?
So I grew up in Northern California, San Jose, and then I had moved to Houston. I moved around a bunch of places. I moved to Tucson, Arizona, then I moved to Texas, Houston, then to Denton, Texas, and then Las Vegas, and then now I'm living in Los Angeles.
Okay. And so did you take some of your winnings and start investing?
Hell no.
No.
I wish I did. Are you kidding me? That's like one of my biggest regrets I have to say. I did really well for a 21 to 25-year-old. I was making probably $250,000 to $300,000 a year. And I was pretty much broke for the most part because I would make the money, I would have a bankroll, and then I would lose it in one night. So I never had enough money to really invest it. And like back then, all the money I had, I was like, oh, I have to keep building my bankroll instead of investing it. So that was pretty brutal. But yeah, I mean, yeah.
So you just kind of zeroed out?
I always zeroed out.
Your career, you kind of zeroed out at the end of your career and decided to go do something else?
Yeah. I mean, when I was about 26 years old, right around there, give or take probably a year or so, or 6 months or so, I decided poker wasn't for me. This lifestyle wasn't for me. Late nights, the way I had to manipulate my brain to be angry at everyone so that I could play better poker and play more aggressive poker towards people. It's not who I am. I think you and I have had interactions. I'm a pretty sociable guy. I like people a lot. And so that wasn't really fun. And I always knew that real estate was the end game. I will say though, it's a really hard thing to do, to take a step backwards so that you can move forwards in the future, right? Because my income was going to drop drastically down to almost nothing. And I was going to have to learn and start on the bottom of real estate and learning. And that wasn't fun either. But I had to take a few steps backwards in my mind to then take a few steps forward. And then now it's kind of like I'm sprinting at this point.
So you had a plan when you were phasing out poker. You had a plan, and that was real estate.
Yeah, of course. 100%.
Needed to figure out the steps.
That's exactly right.
What was the first step?
Yeah, well, we could talk about the act like the logical first step that I took, or you want to know like the to find a fun story. The actual first step that I took because I had no idea what I was doing. I went and knocked on someone's door. I just figured, yeah, at this point, because I knew about it, but I also knew that people were selling their homes. I just went and walked up to a house that I liked the neighborhood in, and I knocked on the door and I saw a for sale sign, like what's the price? Can I buy it? And he goes, "Are you working with a broker?" I'm like, "No." So then I went and got a broker, and then I started kind of this process of real estate. So I was like, "Oh, I need to educate myself a lot." I think I just had a bunch of confidence in me. I'm just going to walk up to this house. Why not? But it really led into me just having a ton of education, teaching myself, absorbing as much info as I can. And that's kind of what I did.
And did you end up buying that house?
No, no,
No.
not at all. I didn't even go tour it at all. Because when I talked to the broker, she's like, "Well, all right, how much house can you buy?" And I'm like, "Well, kind of just stopped playing poker. Haven't really shown anything because I've been, lost all my money a bunch." And so we started off smaller. That one was a few $100,000. We started off with a smaller $50,000-$65,000 homes.
Okay, a single family house.
Yeah, the first home I bought to invest and flip was actually a mobile home in a mobile home park in Las Vegas, sight unseen from the auction.
Okay.
Yeah.
Oh, nice.
Yeah.
I don't know that I've ever like dug into buying sight unseen foreclosures. What do you do? Like sight unseen, you just hear the price. Walk me through that, how that happens.
Yeah, so you typically will get a list. Typically you get a list a day before. So in Las Vegas, you get a list a day before. They usually go to trusted vendors, and the vendors will kind of ship it out to individuals like myself, or you're really good with them, they'll send it to you. And so I would get a list at that time, about 30 to 50 homes that were going to go to auction the next day. Of those 30 to 50 homes, I would say about 80% actually made it up to the actual auction bidding, because a lot of times trustees can pull it back at the last second.
Okay.
So every day around 3 p.m., I would get this list, and then I would just do all my research on it. I would try to do Google Maps to go drive by it. I also hired a service that would actually get the list somehow before even we did, go take pictures of the homes, try to take pictures of inside the homes. Is people living there? People are not living there, to kind of give you as much information as you could. And then you just run your numbers and you generalize the numbers and you pad all of your numbers for worst case scenarios. That habit has really taken me into how I invest now, because I'm always padding all of my numbers.
Sure.
All of my underwriting, my conservative underwriting is really stems from my auctions that I would always buy, because you always have to plan for worst case scenario.
And was that during like '08, or was that during a downturn? Because I'm sure that the foreclosure market fluctuates pretty significantly depending on the economy.
Yeah, so that was about in 2010 to 2013 range, or
Okay.
like 2009, give or take a little bit, but it was right around there when I started.
Okay. So there was still like, yeah, probably '07, '08 was when the massive foreclosure wave hit. And then it just took probably 5-6 years to
Yeah.
work through all of it.
It was really a great time for me to get in. Obviously, with all the learnings that I have now, I wish I could go back and do things a little bit differently, keep a lot more properties, and my structure differently. But, it was a really good time to buy foreclosures in that time. Now, what happened in Las Vegas, one reason why I wanted to move to Los Angeles, they changed the laws around, because I was able to buy homes and get them sold on day 91. That was kind of the rules that were in place, that you could flip a home and you could sell on day 91. Then after a few years, Las Vegas made it so that, because everyone was just buying foreclosure and flipping houses like in 2007, 2006. So they changed these laws. Then after a few years of that, they changed it that you couldn't even list the home until day 91. Now I was able to, let's just say, take the same amount of money, technically flip the home 4 times. I could turn my money over 4 times in a year. It kind of sorted out to 3, because there's always hiccups and things that happen. But then when they changed it where you couldn't even list it to day 91, I could only turn my money over twice in a year, essentially. Because then you have to list it, and then sometimes you have a buy or sell out, and it takes at least bare minimum, like 30 days. It's more like 45 days. So that really kind of capped me on how much I can turn over my money. And I just my wife at the time wanted to move to Los Angeles. And I said, all right, things are slowing down for me here. The foreclosures are slowing down a lot. So let's move to Los Angeles.
As we were emerging from the downturn.
Yeah.
Now, how long did you spend in Vegas?
I lived there for a total about 5 years.
5 years. I've been through like 3 recessions, and every time the same thing happens, it's like right when the market is really heated and hot, and you haven't hit a recession yet, Las Vegas starts, like everybody's flipping in Las Vegas and building, and they've got endless land there, the desert. And then there's a wave. You hear all these investors like going to Las Vegas because that's the gold rush, where the gold rush is. And then it just totally collapses in the downturn because it's an entertainment and leisure economy. All the economy is discretionary. So when people don't have money during a recession, they stop going to Vegas.
Yeah, that's absolutely true. I really did witness that as well. I still have a motel in Las Vegas that's doing really well. I'm actually about to sell it at the end of this month. But, I think Las Vegas has done a really good job at importing businesses and creating more than just outside of what's on the strip. And they're really building it out. They're really putting a lot of infrastructure with a lot of good jobs, especially in northern Las Vegas.
Yeah, because that's what they need to do. They just need to diversify their economy so that they have a more durable economy when you hit a recession.
Absolutely.
So that the housing values will hold up and everything.
Yeah. And somehow get rid of the freaking 115 heat, but
right. And find some water.
Yeah, they're going to need that too. So
that would be nice. Cool. And so what are you up to now? Where does that bring us to today?
No. So when I moved to Los Angeles, I wanted to go flip my first home here, realizing that I was a really small fish in a really big pond. I mean, you live in LA, you get it, right? Yeah. And so in Las Vegas, I was, kind of a bigger fish or medium fish or a medium yuppie or whatever. And over here, what I really realized is after I flipped for my first home, I said, all right, this is tough here in Los Angeles. The margins are tough. The competition is stiff. So I have a tendency to always go where there's less competition and more value to be created. So in the area that I was developing or did my first flip in, it was Highland Park, Mount Washington area. And I was able to identify that area many, many years ago as a very up and coming area because, the path of progression south is downtown and blew up at that time.
Right.
No one can move. Yeah. No one can move west because it's too expensive. No one wants to move east in Los Angeles, and no one wants to move south of downtown. Right. Because then it's like bad neighborhoods. So I was like, oh, this is a no brainer. It's like encapsulating this area. So what I did is I went a bunch of land and I started developing. Never developed before.
Okay. Interesting. Yeah. And just to back up a second, for those who don't know, LA, you're talking about this area that is, like you said, that over the last 15 years, maybe more, since like 2010, 2008, even back then, it was Silver Lake, it was Los Feliz, it was Koreatown, like all those like formerly gritty, tough areas were becoming super hip
and super expensive, right?
Super expensive. Yeah. The prices were going up really rapidly.
So I just followed the path of progression and I bought a lot of land there. And then for the previous 5 years, so 7 years total, in 5 years of that first 7 years, I was developing, essentially just land up construction residential.
And you went from not knowing anything about that to jumping in?
That's correct.
I've never done ground up construction in LA, but it's probably somewhat difficult, as everything is in LA.
Yeah, it sucks. Let me just tell you that right now. It sucks. It's slow and tedious, and you're dealing with councils and neighborhood councils and LA in particular. It's kind of a nightmare. I had a really good contractor to help out on all that side of the construction side and all the permits and everything, but it's a nightmare. And the reason why I got out is because I wanted to create more passive income. My mindset has shifted in the last few years to just creating passive income. I want to have a family. And so to create that, I always wanted to get into multifamily. And I did that about 2 years ago. And in the last 16 months, I closed on my first deal in Wichita, Kansas. And since then, we've closed on about 950 lots and or pads at this point.
Okay. And are those multifamily pads, lots?
Yeah, so mobile home parks. So
Oh, okay.
now I only focus on mobile home parks in the
Okay.
Midwest. That's it.
And did you do some multifamily,
I
just
did.
straight up apartments in between? So you've done everything at
I've
this
done a
point.
little bit of everything. Yeah.
Okay.
Yep.
Yeah, that's cool. So you got into construction, and I guess it makes sense that you could be a fairly lay person and be into the construction business if you have a good contractor.
Yeah. You always want to build out a team that masks your weaknesses and your strengths.
Sure.
That portion of me is like an alien language. I mean, I know enough, right? But it's an alien language. I don't want to learn it, but I'm really good at numbers. I'm really good at figuring out what things are going to sell for, what the concept is. I know what's going to sell, which is actually pretty not that hard in LA, right? You just put up anything and it kind of sells. But I had a really good contractor to help me with that I actually trusted, which is incredibly difficult to find.
I'm sure.
Yeah.
Yeah. You're depending so heavily on that one contractor.
He
If you're
happened
not
to
an
be
expert in it.
Yeah, he happened to be a family friend for a very long time, so we were able to do business together.
Yeah, you had a lot of trust.
Yeah,
Okay.
exactly.
And then you moved to Wichita, Kansas, and
Yeah,
you're doing mobile home there?
right. So what I ended up doing is I wanted to get into low income housing because I liked the cash flow, I liked the position, I liked the long term supply demand issue for for low income housing. I went to Wichita. I got a contact of a broker in Wichita. She's a residential broker. I was like, hey, I'm going to look into the Burr method. And so this was fun. She goes, okay, well, I actually have 74 units of low income. I think it'd be right up your alley. I know you wanted one, but you want to look at this. I said, sure, absolutely. Send it my way. I saw the numbers and I just said, there's no way that these are the numbers. And I even had another friend underwrite it for me because I was like, maybe I'm missing something because this can't be the numbers. It was. And so I ended up buying the 74 unit. While I was in escrow, like I always do, I just ask, hey, to the property management company that we hired, do you guys have anything else? Do you know of any other properties that we could buy? And they said, well, yeah, we could ask the sellers of this one apartment complex. I know they wanted to sell it 2 years ago. Let me just ask if they want to sell it. It's a 180 unit. They're like, are you interested? I said, yep. Sent me the numbers. It worked. And I said, okay, let's buy it. So I went from wanting to buy one residential, like a Burr potentially in Wichita, to now having about 250 units in Edinburgh.
So you
Right.
bought two. Were both of the, I know the second one was an apartment building. Were both of those apartments, or was there a mobile home park in
Yeah,
there?
no, the mobile home parks come later.
Okay.
Yeah, this so 74 unit was a portfolio of triplexes and quads. And then the apartment complex was 180 unit
Okay.
apartment complex.
How did you pay for that?
I paid for it myself.
You did. You
Yep.
didn't. Did you put together an investment
No.
on it? It was just you.
It
Okay.
was just me. And so what ended up happening then thereafter is I started shopping around for more apartment complexes. Now at this point, I know 100% this is what I'm pursuing. I'm selling off my development deals, selling off my residential portfolios, transferring money, moving all money around,
To
to make
focus
this
on multifamily.
to focus on multifamily. I knew that I'm slowing down the development portion of my career. And so I went to go buy one mobile home park. And because now I'm realizing the apartment complex, the cap rates have compressed so hard. We're losing out on so many deals. I mean, we're underwriting and we're so close to getting so many deals. And it just keeps falling out of escrow. And it's frustrating me. And so then I start educating myself on mobile home parks. And I go and buy one mobile home park in Alabama. And this one small 23 unit mobile home park is now I buy it and some looked at it, it was like, oh, it's top of market. I ended up buying it, but the yields were better than my apartment complex yields. And I was having a lot less headache. And I said, there is definitely something here. What I really realized then is there's so much less competition here. And so I really diverted all of my attention to mobile home parks.
Okay.
Now, along the ways, I bought another 160 unit apartment complex in Wichita because it came my way. It was just too good of a deal for me to pass up. So I ended up buying that as well. So bought a few mobile home parks. And then I now have kind of built out my team. And I realized I don't want to turn off lead generation. I don't want to stop this. I don't want to stop this inflow of deals coming in. So then that's when I started syndicating. So I started just syndicating about almost 7 months ago, 8 months ago, and we've done
Okay.
4 deals. Yeah.
What, just out of curiosity, what do you pay per door in Wichita?
I paid about my average is right around 35K a door.
Okay.
Right. But you have to understand, these are mostly like studios and one bedrooms.
Okay.
And this is obviously like in C areas.
Right. Right. It sounds you were used to or are used to, LA prices and then Vegas prices. But yeah, I'm from the Midwest and that sounds about in line with some Midwestern markets.
Yeah.
At least last time I looked
Yeah.
and looked at buying something there.
Mhm.
That's cool. And you built out your team. Yeah. What does your team look like now?
Yeah. So I have one partner, and then we have a full-time, essentially EA infill specialist. And we've hired out an operations manager to overlook all of our managers now at all our parks. And we just hired acquisitions lead, essentially just
Okay.
to be calling brokers 100% of the time. And then, just 2 days ago, I had somebody in my life who has asked me 4 times, which I just saying this story because I think this is really cool, because I actually did this when I learned how to do real estate. Asked me 4 times if he can come intern for me. I don't really take him seriously, but after the fourth time, I said, you know what, I'm building out my team. Sure. He's like, I'll work for free. I'll do whatever it takes. I just want to learn. And so we just kind of brought him on as well too.
Oh,
Which
that's
is really
cool.
cool. Yeah, it's really cool. I
How,
respect anyone like that.
where did that person come from?
Just social networks.
Social networks.
Yeah,
They
just
just
social network of mine. Yeah.
wanted to get exposure, wanted to learn from you.
Right.
Oh, cool.
Mhm.
Awesome. So are you exclusive? Are you still consider you and your company to be a multi-asset class investor, or are you pretty much narrowed to one or two?
We are strictly narrowed to mobile home parks. We are
Home park.
absolutely only focused on mobile home parks in secondary and tertiary markets that we're buying from mom and pop sellers where there's a lot of juice and yield left.
Okay.
Yeah.
Yeah. And how is there a lot of competition for that now?
So it's growing, but there's not, like, if you're comparing it to the multifamily space, no, absolutely not. Right. But typically whenever we get into a little bit of a war with others, there's only one, maybe two other people that are buying. Because when that ends up happening, we are flying underneath institutional money and institutional targets, and we're typically higher than most just buyers themselves, right? So we operate in like the $2 to $6 million range,
Sure.
50 to about 100 lot range, and we're in usually secondary and tertiary markets where most institutional or in big operators kind of stay away from. But
Right.
this is where we're finding a lot of our yield and a lot of our juice.
Okay. And you said the dollar range, was it $2 to $6 million?
That's typically where we're buying at. Yes.
Okay. Okay. Yeah. It's interesting. Almost every asset class has that tier where in between the mom and pops, the single
Yep.
owners who pick up a rental property, and then between that and institutional.
Yeah.
And usually a gap, and it's usually a pretty good area to exist in because there's less competition.
And that's what we're attacking, especially in the mobile home park space, right? Like, there's a lot of operators in multifamily now that are pretty sophisticated. There's a lot of education out there, but really we are dealing with like the stereotypical mom and pop seller at this point for
Okay.
now. But in 5 years, it's going to change. And so that's why we decided, let's hit this really hard.
Okay. Because you believe that in the next 5 years, the owners of mobile home parks will be more similar to you, like who
Yeah.
are sophisticated.
Yeah, absolutely. Plus, I like to think long term, so we hold our assets all long term. That just goes without saying. Um, but I really like it because the supply of mobile home parks is dwindling, right? And the demand is increasing. We know that to happen with all the economic pressures, inflation, all these things that are happening. The middle class is getting squeezed. So what happens then? People just kind of go down lower on the bracket of rent, right? And so mobile home parks are positioned at the bottom. And what you realize, there's a lot of stigma around them, but they are just blue collared workers that are just trying to get by, and they're good people. And so that's the way I'm positioning myself for that.
Yeah. What is mobile home construction like? I mean, is there new supply coming on?
So, not parks itself. There's an argument for you can build some mobile home parks but I would have to argue that's going to be on like coastal areas, like maybe in like in Southern California. California has a ton of mobile home parks. Florida. The reason being is because the infrastructure still costs a lot of money to build. Then the lot rents, let's say in the Midwest where I operate, it's not going to be feasible unless you're getting about 1,000 to 1,200 lot rent to get new homes on. So good new homes, double wides, are costing about 100 to 120,000. Single wides you can get for about 50 to 60,000 in all the way. But even at the 50, 60K range in the Midwest, typically people don't really have money to buy those or the credit or whatnot. So we're definitely not seeing any expansion of mobile home parks. Now you can get manufactured homes, but does that really become feasible into your parks? That's a whole nother conversation we can have too, where it doesn't really make sense, in our opinion, to have these huge infills with brand new homes in markets sometimes, because some people can't afford it. Yeah, that's a whole nother topic.
Yeah. So these began as the most affordable option, and it almost doesn't make sense to grow out of that, most affordable option. You want to remain the most affordable option.
That's correct. Yeah.
Okay. That's interesting.
Mm-hmm.
So you've been in a lot of asset classes, doing a lot of different things. Is there a mistake that you made along the way, or any, memorable mistake that you learned the most from and maybe became key to your success?
Yeah, I think the biggest growing pain that I had was picking partners that weren't experts. There was a time where when I first moved to LA, I was playing poker, I was doing real estate, and I was just hustling, right? I was just hustling as much as I can. And I trusted a partner that wasn't really well equipped to be trustworthy. Not
Right.
that he did anything wrong, he just wasn't skilled enough, right? I essentially found a body to do the work instead of picking who that person was. And so he did get us into a bad deal that, I'm still fighting through right now. It was a land entitlement deal. And 4.5 years later, 5 years now, I'm still trying to fight through it.
Oh, really?
Yeah.
Okay.
So it's really the partners, because the partner I have now has really unlocked everything, because again, you want to pick your strengths and weaknesses, right? So luckily I was able to dissolve that partnership very quickly on. He was very cool about it. I just said, hey, this isn't working. And so, but getting the wrong partner can really inhibit your growth.
Set you back. And the opposite is true. Getting
Absolutely
the
true.
right partner could really, take you to a new level.
Yeah, absolutely.
Yeah. So what is in the mobile space? What is a deal? What separates the 80% from the 20%? Like, what do you look for in a good deal?
Yeah. So what we look for is high tenant owned homes and not park owned homes.
Makes sense.
If we have a lot of park owned homes, it's kind of like an apartment complex. We have to deal with the repairs and maintenance. That's a whole different game, right? So we like tenant owned homes because they own the homes, they do the repairs and maintenance, and because it's not transitory. It's harder to move your home somewhere. It costs about anywhere from 5,000 to 7,000 to move your home. Typically, most cases, they don't really have enough money to move their home, right? The non-transitory aspect of that. We don't look for a lot of infill projects. Infill projects are empty lots on the park that we then have to find a mobile home to put on. Our acceptable rate is about only 15% at most vacancy. That includes empty mobile homes and or lots. We're very conservative in that sense. I think there's some operators out there that really get excited for big infill projects because that's where you build a ton of equity. But because of our operational background, we can increase our equity in a lot of different ways. And then we just look for good markets, right? Even though we operate in secondary and tertiary markets, we really have to be anchored down by good jobs in that area. And one factor I look at is, are these jobs going to be here for 15 years from now? Anytime I buy a mobile home park, I want to know I can recycle my money at least 3 times, right? Hypothetically, if it's every 5 years. And so that's what I look at. Will this park be around for 15 years? Will this market be here? And that's usually about 50 to 60K population and more. But one of my best performing assets is in the 25K population town, right? Well, there's a lot of growth and a lot of manufacturing jobs that are going to be around forever.
Okay. Oh, great. So do you look for population growth?
But I look at population growth, absolutely. It is one of the factors. My number one thing is I look at the jobs. How
Good
strong
job.
are the jobs in the area?
And how durable they are.
That's correct.
Industry that won't
That's
get
more
wiped out.
important to me than population growth.
Sure. Okay. Sure. Of course. Makes sense.
Yeah.
What's a trait that you possess that has served you best both in real estate and in life?
I'm pretty adaptable and I'm pretty even keeled. I think anything can come my way and I'm able to kind of attack it. It's probably because of my poker background.
Keep it straight.
Yeah. I mean, if you're emotional in poker, you're just going to lose your money. And then, so I really learned that trait. I'm a really long-term thinker. I make decisions based on 10 years from now, which really pays dividends, massive dividends 10 years from now. But to delay that gratification, I don't think a lot of people do in our industry and in our circles now. Yes, but I still would say that's still a very minority, like part of the population.
Okay. Is there a trait that you feel like holds you back?
Not anymore. So this isn't in question, right? Because if you asked me probably 5 years ago, it'd probably say my ADD. I would say, man, because of my ADD, I probably didn't maximize my value here. I didn't think about this little detail here. But now, given the way my brain operates, I love growing a business. I love scaling a business. So now it's kind of like my superpower. I kind of flipped it on its head. And because of my idea, I'm able to delegate a lot more in my business. And so when I hired the right coaches, it really unlocked for me.
Cool. So you made it work for you.
Yeah.
Excellent. What's a daily habit that brings you the most benefit?
Oh, it's my morning routine.
Morning routine? What's your morning routine?
Right when I wake up, I go and have like an electrolyte drink, and then I make a yerba mate tea. While that's warming up, I'll go do 50 push-ups, 50 sit-ups, and then 50 squats. Right after that, I'll go do my cold plunge for 3 minutes. I'll come back in, I'll journal, and then I will answer really quickly any really important like emails that need to get done, but typically not. And then I'll go work out for an hour. And then I start my day after that.
Oh, cool. That's great. I do some of those. I do the cold plunge. I do, the sauna. I do a sauna, infrared, cold plunge. Yeah.
It's awesome.
Yeah, it's great. Love it. Are you ready for our question round?
Yeah, let's do it.
So here we go. The book you've recommended most over the past year?
Die with Zero by Bill Perkins.
Die with Zero, Bill Perkins, giving away your wealth?
No. It's not about giving away your wealth. It's about mapping out your life and knowing that you're earning potential in every stage of your life, and then how to use that to maximize your experiences. It's like a curve of like how you should be spending your money, and then how you should just always be spending until the fact that you have zero when you're about to go die. So it's kind of like, it's like ass backwards. People just save, they retire, then they go travel the world, right? Like generalizing. Right.
Yeah.
When they're 75 and they're traveling the world, like you're older, you can't do all the fun things that you wanted to do or go jump off all the cool like cliffs. So he's like, so he basically maps this out. This book really shifts your paradigm, at least shift my paradigm into like really enjoying the money that I make and buying experiences and going out and not being so tight with it. And really my value of my, like, or not the value, my joy in my life has really gone up because I'm not so trapped, right? Like we live like kings. We live in a day and age where we're so connected and we can go travel anywhere. We live better than kings used to. So for me, it really has shifted everything around money conversations that I've had to really die with zero.
Cool. Awesome. Do you have a favorite quote?
Ooh, I have many, but the one that first came up to me was a mentor of mine said, Pasha, get rich slow. That was it. And you guys can take whatever you want from that slogan. He just said, get rich slow. There's no shortcuts. Don't chase 100 Xers. Do the things that you're doing in real estate. Keep compounding, and you're going to be uber successful. Yeah. And so I thought that was really cool, and it put a lot of things into perspective.
I like that. What decade created the greatest music?
Ooh, 70s.
70s?
Yeah.
Nice. I like that. That's very solid. Aside from real estate, one day you could spend all day talking about?
Oh, financial literacy.
Okay.
Yeah.
Cool.
I have a really big passion for helping others create financial success in their life. And so, I think it's such a taboo subject, which is it really hurts because there's so many people out there who have no idea what to do with money. And so I've kind of positioned myself where everybody comes to me and say, hey, what about this? What about that? What about this? So financial literacy is something I get juiced up on.
You should mingle in the entertainment business. A lot of people who don't know what to do.
I bet.
Definitely a lot of people who don't have any clue what to do.
Yeah.
What was your most awkward year?
Oh, this is easily senior year of high school.
Senior year of high school. Okay.
Easily the
Usually
most
the
awkward.
glory days. That was awkward?
Yeah, because I happened to not hit puberty until after high school. So I was
No way.
5'2" and 185 pounds all of high school career
You're
almost.
kidding. Wow.
Yeah. So like all the awkward situations that kind of happened with it, it was brutal.
Well, on that subject, is there a high school friend you'd want to say hello to?
A high school friend? No, but a middle school friend. Yeah. Jason Origi. He was more of a middle school friend, but in high school, we kind of slowly stopped being friends. The problem was I retreated a lot when I was in high school. I was a class clown, but in reality, I was a loner, and I just retreated into video games. So I would go to school, like probably ditch school early and then go play video games till the wee hours in the morning.
Yeah.
That was my like last 2.5 years of high school.
Wow. All right. Lastly, when are you happiest?
Ooh, when am I happiest? I'm a pretty happy guy. Like, I think you know me, like I'm a pretty happy dude. I'll tell you what, I'm at my happiest when I have my best friends around me and we're on the beach somewhere and we're listening to great music. I'm like blessed to have so many musicians around in my life. Like everybody in my life is musicians. And then you have me, the capitalist, right? Like, and so when I'm around a really good music and we're with all my friends and we're just, razzing on each other or drinking a beer together or dancing together, traveling somewhere, it's some of my peak favorite moments of my life.
That's cool. I'm a writer, and when I was growing up at our dinner table, my dad used to say, like, what's the highest art form? What's the best art form? And we would always argue about it, and everyone had a different opinion. But the irony is not lost on me that I'm a writer and have been a writer for 25 years. But my favorite art form, music. I could listen to music forever, and I get so obsessed with like bands and musicians, and it elevates me so much. I'm like, oh my God, I love a good song or whatever, more than anything else, more than a good joke, more than a good book.
Oh, me too. I think I like every genre of music as long as it's a good song. I just love every genre. When you ask me like what era creates the best music, I picked the 70s because I really do believe that. But my favorite music type was created in the 90s, and then recently I've been discovering a lot of other different music. So it's like West Coast rap, like I love. Yeah, I just grew up on that, right? And then really good like Tulum house deep music has really been captivating me for the last few years as well too.
Yeah, I just love the movements in the history of music. It's like there was something to say. There was something that needed to get said, and it did through music. It's amazing.
It has substance. There was something there. There was like a struggle, had soul.
Yeah.
Now it's like, what the heck? Like, unless you got like have the Adeles and some of them, it's just in my opinion, all mostly shit music. But
and it kind of always has been mostly shit music, but there's things that cut through that it's like, oh my God, they had something to say.
That's funny because I say things like that now and instantly just like transport me back to like my father. He's like, all your music is shit music, So like, the tables have turned now.
That's cool. And how can listeners reach out to you?
Yeah, so I'm pretty active on LinkedIn. Well, I don't post a lot, but I will always answer anybody's messages. And then you can go to evokecapital.net. We are about to launch a $15 million fund. That's going to go live in about 2 weeks. So if you want to get any information on that, you can just go to my website, evokecapital.net.
All right. Awesome. Well, thank you so much. I loved, going down some roads that I don't get to go down very often.
Yeah.
Gambling, poker, and mobile home parks.
Yeah. Yeah. It's a fun journey.
Awesome. Thanks, Pasha.
Yeah. Thank you, Mark.
Thank you for joining us for the Wild West Real Estate Show. If you like what we're attempting to do here, please subscribe so we can continue sharing these with you. And if you want to check out our website, it's quantumcapitalinc.com. You'll find podcast episodes as well as multifamily properties we're looking at and how you could potentially participate. Look forward to seeing you guys soon on the Wild West Real Estate Show.